In this video, I'm going to show you exactly how I built 4 passive income streams in less than 30 days. 1 year ago, I had a portfolio of index funds that looked good on paper, but that was just about it. It didn't pay me any hard dollars that I could use today in upgrading my life. So we're gonna look at the method that I used to solve this problem and how I built the 4 passive income streams and the method that I used to determine which assets to invest in. Also, make sure you stay until the end of the video and I'll show you my favorite AI tool for doing market research. And this will speed up your research in doing this process by at least 5 times. So most investors, including myself, when you begin investing, you begin passive index investing in ETFs or mutual funds. And this has been very profitable since 2008. If you've just closed your eyes and invested in the S&P 500, you've done pretty well over the last 18 years or so. I started investing in my 20s and the portfolio started to look good on paper, but the day-to-day actions of my life when it came to my finances didn't really change. And so what I wanted to look at is how to get out of this dead portfolio syndrome. And I began studying REITs and BDCs. Now, before we go into the REITs and BDCs and how I broke this down, disclaimer, this is never investment advice. Always counsel with somebody that's your qualified investment professional. Of course, on this channel, this is always for educational purposes and learning the different tools that are in the market. So what is a REIT and a BDC? A REIT stands for a real estate investment trust. And what a real estate investment trust is a special type of stock that owns real estate and they pay out 90% of the income from the stock in the form of dividend. And they do this to get a special tax benefit where the corporate shareholders at the top don't have to pay federal taxes if they distribute 90%. On the other end, we have the BDC. This is short for business development credit. This is another form of a special stock similar to the REIT in the tax treatment where they have to pay out 90% of the income as a dividend to shareholders, except they're giving out loans in private credit. This is usually to smaller companies that can't get a high yield investment grade bond loan, so they can get a loan from a BDC company. REITs and BDCs have some of the lowest barrier to entry and they're completely hands-off versus getting something like a rental where you have a down payment, you have increasing insurance costs, you have calls from tenants, all these things that go along with having a rental versus just buying the REIT and BDC stock. So now that we've determined the tool that we can use, a REIT and BDC, which ones do we buy? Well, the resource that I use is dividend.com. And when you go on dividend.com, this is going to be a great resource and a database where you can look up a list of different REITs and BDCs, how much they pay in dividends, what type of assets they own, and just learn a little bit more about the company. Now, the order that I like to put my risk tolerance in when I'm looking at the different REITs and BDCs is number one, I want to look at the consistency of the dividends that are being paid. If the dividends aren't being paid in consistency, and maybe they just paid out the dividend rate for a year or a short period of time, that's not a good sign. I also want to look at the liquidity. What good is it if you buy one of these stocks and you invest a good amount of money in it, but it doesn't have the proper amount of liquidity for you to sell out? And I also want to assess the risk. How I look at the risk of the REIT and BDC is what we call beta. If you're not familiar with the term beta, beta is a fancy finance term that just says how correlated is this with the broad market. So if you have a portfolio of stocks and ETFs following the index, the beta will let you know how correlated this REIT or BDC is to what you currently have in your portfolio. Now, all of this can be a lot to find. So the tool that I like to use to speed up my research is Perplexity Finance. If you download the Perplexity Finance app, you can ask it any question when you go to the finance tab and find out all this information about different REITs and BDCs that you're going to be researching and figure out which one is the best for you. Now, I will preface and say that this is not the ideal way to maximize the most money that you're going to have in retirement. This is about having a balance between enjoying your life today and building a purposeful portfolio for your life and still growing your assets in the future for a future time where you may retire. Now, the next thing you want to look at is your overall time frame, because if you're 30 versus being the age of 50, well, you have a lot more runway to go to let your portfolio grow. And also generating the passive income in your portfolio can cause you to pay higher taxes in the short run. Now, since I'm young, I didn't want to over allocate to passive income. I just wanted to generate something small that I could use for some extra auxiliary activities like going on vacations. I'm not in the business of trying to have the most money possible when I'm age 65. I'm in the business of securing my finances and also creating experiences along the way, because in my opinion, money is only as good as the experiences that you use it on, guys. Like, you can build this huge portfolio of millions of dollars and spend all your life eating top ramen and then look back and be like, man, I missed out on all these years of my life because I was so concerned about a number on a piece of paper. So don't let that trap you. Use your money as you see fit and what makes you happy. So I have an example BDC that's called Lean, ticker symbol LIEN. This is Chicago Atlantic BDC. They specialize in giving out loans in the cannabis industry, right? And so if I want to do some research on this stock, one of the things that I could do is I can enter the word Lean into the Perplexity Finance tab and find out all the information I need about it to see if it's a good fit for my portfolio. And I would do this one by one with REITs and BDCs that I will find. Now, one thing that I learned through this process is that you do not want to just go off the REIT or BDC that pays you the highest dividend yield, right? Like, usually if they're paying a super high dividend yield, there's a reason of it, but you can find a middle ground where you're getting a nice dividend yield. It's within your risk tolerance and you're building this passive income. So then I identified 4 REITs and BDCs that I found that were great fit for my portfolio. I entered them in Perplexity, did some research, made sure that it was something that I was comfortable with. And then I began to work backwards because I would start with the end goal in mind. I decided, okay, based on my portfolio size, how much of this do I want to dedicate to generating passive income? And how much passive income can this realistically generate me based on the risk that I want to take in my portfolio? And I would open up the Perplexity Finance tab and type in that ticker and begin to do all the research necessary for me to decide that if this was good for my portfolio. One thing I would look at, again, is the consistency of dividends. I would look at what type of assets that they owned. I would also look up the liquidity of the stock. Some stocks just don't trade a lot of volume on the market. So I didn't want to put a large sum of money into a stock that didn't have much trading volume, and then I get stuck and I can't sell out in the future. And then, of course, looking at how correlated this was to the other stocks in my portfolio. Now, at a minimum, I wanted to find 4 different REITs and BDCs because I wanted diversification within my passive income sleeve in the portfolio. So imagine if you were to just put it in one REIT or BDC. Well, now your entire passive income and the money that you put in there is determined on one single stock, and things can change. The dividends they pay out can change. The assets they own can change. Anything can happen in the markets, right? Once I identified that, I would see what the blended yield is. How do you find out the blended yield? Well, you're going to look at the yield that the REIT or the BDC pays. Again, you can find this on the Perplexity Finance tab. And then you multiply and add the amount that you're investing by the dividend yield. That's going to give you how much you're going to get paid in dividends, and then add up each of the REIT and BDC's expected dividends. And then this would give you your blended amount, your blended yield of what you can expect to earn on the investment, generating your passive income. Now, let's look at 2 mistakes I made, and I'm going to tell you these mistakes so that you don't skip over them. So the first mistake is underestimating the tax drag. When you are using the REIT and BDCs to build passive income, you're going to pay taxes at the ordinary income tax rate, which is the highest tax rate. This is not as favorable as paying capital gains tax. This is why I did not want to over allocate in my portfolio to REITs and BDCs. These are great, generate the passive income, but understand it's not going to be tax friendly. The stocks that are in the portfolio are going to continue to grow. You're not going to pay taxes on them until you sell, and the capital gains rates are, again, much more favorable than the ordinary income rates. The other mistake that I didn't want to make is underestimating the price volatility. And this is something that can get to you, and it did get to me sometimes. So when you look at a chart for a REIT and BDC, let's say we look at Lean's chart here, you're going to see that it moves and it's like heartbeat kind of formation versus a growth stock that tends to move up and to the right as they're growing the company. And in this heartbeat formation, you're going to notice that there's volatility between 20 and 30%. So at any given time, your original investment might be up 20 to 30%. It might be down 20 to 30%. And it just moves back and forth in this kind of sideways formation. And this is consistent across most REITs and BDCs. So underestimating this price volatility can get you in an emotional state, because imagine you invest $10,000 and then you're down 30%, you're up 30%. What I learned is you are paid based off the shares that you own, not the price of the stock. That's very key to understanding this. I was paid based on the amount of shares that I had and the dividend per share. So it didn't matter what the price of the stock is. And so I'm buying into a piece of passive income. I'm not buying into a stock expecting it to grow and appreciate. And that's what's unique about these REITs and BDCs, unlike other stocks in the market where you're buying in and expecting this large growth and appreciation over years and years to get your return. It's just a different mindset switch. So after planning this out and making this shift over a 30-day period, I had 4 separate investments that now hit my account quarterly to build passive income from 4 different sectors in REITs and BDCs. The psychological shift that happened in my portfolio is that my portfolio now seemed alive. I was much more motivated. I would look forward to these quarterly payments, and my portfolio, I felt like, started working for me versus just being this number somewhere in cyberspace out in the far gone land that I would use 30 years from now. This was a strategic rebalance and strategic functioning of the portfolio. Now, in the bigger picture, 4 income streams and where I started out with is not enough to change my entire life. But what it is enough to do is to get me started on a roll. So right now, I was able to create $8,000 to $10,000 in passive income using this method. Over the next 3 years, what my plan is to try to double this to $20,000 to $30,000 a year in passive income using this same strategy. As my portfolio grows, I can carve out small pieces of it and then reallocate it to passive income. And then over 10 years, what I want to do is get to the point where I'm at $150,000 to $200,000, and this could cover my entire lifestyle just in passive income. So by taking this stair-step approach, I'm benefiting from my portfolio now in a small way, and I'm building up to the point where the passive income can cover my entire lifestyle. So to recap, let's walk through step by step on how I created the 4 passive income streams in 30 days. The first thing I did is I looked at my total portfolio and I decided how much passive income I wanted to generate that was within my risk tolerance. And then I wanted to do research on REITs and BDCs that could potentially fill this bucket of my portfolio. To do the research, I used dividend.com. I would find a list of the REITs and BDCs, and then I would take the different REITs and BDCs and begin to do research using the Perplexity Finance tab. In the research, I would research their dividend consistency, what type of assets that they own, the beta of the stock, and the liquidity it had in the market. Once I identified at a minimum 4 REITs and BDCs that I felt like fit my risk tolerance, had the dividend yield I was looking for, and was something that I wanted to buy into, I then looked at what would be the average dividends I would earn when I put these stocks together, all 4 of them. What would I be paid out? I then looked at that payout and I decided if this was an acceptable amount of passive income. As a rule of thumb, I generally like to shoot for a 9 to 10% payout. That's what I feel like is acceptable for me on a risk return and what I'm willing to sit through and even do this to begin with. So once I figured out that number, I began to siphon off the portfolio and then reallocate it and plan the dividends. I also wanted to plan around the tax situation. You're going to have to pay federal ordinary income taxes on all the passive income. So I would look at, okay, what amount of money do I need to set aside from this at my tax rate to be able to pay the taxes at the end of the year? And that's it. That's all I had to do. And I did this in less than 30 days with just a little bit of research and understanding the different types of stocks that are available on the market. So now that you've learned how I built 4 passive income streams in 30 days, I want you to watch my next video to learn how to build your net worth while you're living abroad so that you can execute this strategy and see how I built my net worth from $0 to $800,000.